Welcome to the ASX strategy session, and thank you for joining me again for another week of talking about the market. So, as always, we're going to be talking about the ASX 200, the small ordinaries. We're also going to have a look at copper, gold, uranium, and also I've got a couple of really interesting stocks to show you and have a look at. So we're going to save them for a bit later on, and then we're going to do the Q&A afterwards. So make sure you stick around for that and put in a few questions if you've got some. And I'm going to save all the questions till the end. So wait until the end to really start putting those questions in. Let's start to get into our first chart. So got the first chart up on the screen now, and this is the ASX 200. And look, really interesting week what we've had. Last week we were speaking about the potential for a bounce of support, and we've certainly got that. We've got a really strong bounce off this support as well. Support came in at around 6,850, and we just had this situation where market was very much stretched below these moving averages. We've got the 50 and the 100-day moving averages, and we've got that strong rebound off the support. Really, very much a V-shaped bounce. And what I wanted to see, what I was talking about last week, is what was the bounce, if we got one, what was it going to look like? Was it going to be a shallow type of bounce which then set the market up for a potential retest and then break of support, or was it going to be something stronger? And we got the stronger variety. So that's an encouraging sign. Let's just jump over to the 4-hourly chart for a moment and have a look at that. So you can really see the strength of the rally through the 4-hourly chart. Just compress that a bit. That's the big support level we've been watching for 5 months. So the rebound has been just as strong as that sell-off that we saw. And now it's a case of like, what's going to happen? Now we're back up at this resistance band after the bounce, and I want to see what that price action looks like as it plays out over the next few days. Just coming back to the daily chart. And I think what's been really interesting over the last 5 months now is that every time the market sells off, there's always been strong buying interest. The buying interest has quickly come in and pushed the market upwards. So it does show that there's some sort of underpinnings beneath this market. Whether that gives away or not, well, that's time will tell. But at the moment, we can see there is demand on dips. And the problem we've had, though, is that none of these rallies have been able to gain traction. So we get the strong buying, but then there's not the follow-through buying, and that's what's kept the market range-bound. And this sort of price action, it really is typical of range-bound markets. And I think it's really been a situation of the ASX 200 continuing to work off this super strong rally that we had from the 2020 low through 2021. Markets and just thinking about how big that rally was, that was a 71% rally over the space of under 18 months. So when you get price action like that, you got to expect you're going to get the payback period, which is the difficult range-bound trading. That's very much what we've been seeing. And I think while the rally that we've had off the lows, while as encouraging as I think it is, we've got to be mindful that we still have a market which is trading beneath declining moving averages, so the 50 and the 100-day moving averages. And so for me, it's hard to buy a market which is below moving averages. Yes, the rebound looks encouraging, but this remains a sticking point. I'd like to see how this pullback we're seeing now plays out. It's if it's like a shallow pullback where the market just tracks sideways for a week or two, well then maybe it starts to set up a platform to then try and push higher. But look, there's a bit more price action to happen before we can tell that. And should that happen, look, it does set up the potential for another rally. I think this year's the chop that we've had all throughout this year, I think it still can potentially resolve to the upside. So when you compress this and you go, look, we've had a big up move, a big consolidation. It potentially sets the stage for another up move. I think that still is the potential of this market, but at the moment we don't have the price action to say, look, it's all starting to happen. And so for that reason, I'm just not in a hurry to go out there and do a whole lot, to buy a whole lot of stocks, to invest in the index whilst we're below these moving averages, because these situations, they can deteriorate, even though what we saw last week was encouraging. So I don't want to preempt. I don't want to preempt a more positive scenario. Let the price action lead the way for us. So very much a case-by-case basis for me. And I'll talk about that a little bit later on when I go through a couple of stocks I want to tell you about. And also it's a case of exiting stocks that are struggling. And that's very much what I've been doing. I'll tell you a little bit more about that in a moment as well. Before I get to that, let's jump over to the small ordinaries. And again, we've had a good bounce off support during the week, but it does remain a vulnerable situation, because you can see we've got these declining moving averages, and we have the small ordinaries it does at this point look a clearly defined downward trend. So for that reason, I say it still looks vulnerable, and there's no immediate sign that we've got a lasting low. Could turn into something lasting, but at the moment there's nothing to say, well, look, this is it. The market's starting to turn around. And just looking at this chart in isolation, it's I'd have to say that the overall trend does remain to the downside. And I think a retest of this September low from last year, it does remain a distinct possibility. Now, that's out of step with that more encouraging scenario I've been talking about in the ASX 200. And I think this makes the current environment just that extra bit difficult, in that it's we don't have clear signs, we don't have consistency across the indices and across markets. And very much the same situation in the US, where tech's doing well, small cap's doing poorly, and then you've got this big section of stocks in the middle, which are very much mixed. So I'm hopeful that this could still turn into some sort of a large basing pattern, but there's just no immediate sign that a lasting low is in. It's I think it just remains that case of being cautious, managing risk. Most of my recent trades have been exits. There's been a little bit of buying, but mostly I've been exiting stocks which have just been giving ground, which have been just deteriorating that little bit too long. There's been time to push them out. And that's what I've been doing. If the stock hits its exit level, I don't want to give it the benefit of the doubt. I don't want to give it more time. I've just been getting out. And I'll show you what I mean. I was going to show you this last week, but I messed up my screen sharing. So I'll show you what I mean this week. So just have a look at this. This is a stock which left my portfolio. It was last week. Now this is Uranium Pharmaceutical, and this has been a really good trade for me. So this is where I got in back. When was it? It was a bit over a year ago. Actually, I missed the entry point that I was meant to get in. Something was happened. I was distracted. I missed a signal on the day. The market ran. I hesitated, and it was about a month later where I actually got in. But that's one of those things. It's just one of those interesting lessons in stocks, in that when a stock starts to run, if you miss the first time you should enter, often it pays to jump on board at some point, because nothing's more frustrating than seeing a stock you should have bought run away without you on it. So I had a late entry, but I still had a great result. Got a really good upward run. Stock has started to decline over recent months. Hit my stop loss, my trailing stop. This is this red line below. So this is a screenshot from my trading software that I use for the Motion Trader service to come up with the signals, calculate the signals each day, and this was my exit. And then, sure enough, as soon as I exit, there's a rebound. So some people will look at that and say, "Hey, you should have given it a little bit more time," because often these stocks rebound, and they do. And you give it a little bit more time, it can work out, but it doesn't always go this way. This is another stock which I exited on the I think it was last week as well. This one is Avita Medical. Same sort of really good entry. Got a nice upward move from it over the space of about 12 months. Stock started to decline, hit the trailing stop, and I got myself out. Now, had I given it a little bit longer, had I just said, okay, I'll give it another 5-10%, look what happens. There's a gap lower, and it's a mess. The moving averages are crossing, prices below the averages. I don't want to be in a stock like that now. So the best scenario for me was to exit around when my stop was hit. So that's what I'm just doing with my portfolio. I'm not holding and hoping for rebounds, because a lot of the time they rebound, but it's not the rebounders that do damage to your portfolio. It's the ones that don't rebound, and the ones which start to gap lower. They're the ones that can cause the damage. So I think having that disciplined exit point really can make a difference. Now, I'm going to get into some commodities in a sec, but look, if you're getting some value from this, please hit that like button, leave a short comment. If you're watching live, you can't leave a comment on YouTube. You can only leave the comments on YouTube after the video is not live. But please hit that like button all the same, and let me know what you think. Tell me if you like this new format that we're doing. And now, so let's switch over and go to some commodities. Here we go. So let's kick off with gold. So last week we were talking about the possibility of a bounce off this support, and that's certainly been what we've got. It's again a bit like the ASX 200. We've got that V-type sort of bounce. And so this has actually been a stronger recovery than I was thinking we were going to see. And just jump over to the 4-hourly chart for a moment and just have a look at how it shapes up on that, because that's interesting as well. So we go to the 4-hourly. You can see the support level that we broke down from, that gold broke down from a couple of weeks ago, where we were last week. Strong rebound. So we're right now beneath this old support, which is now resistance. So it's going to be interesting to see how gold performs, how it trades over the next few days. Let's just come back to our daily chart. I want to see what a consolidation looks like beneath this resistance. So if we get a shallow consolidation that just chops sideways, it does then present the possibility that we get a platform for gold then to be able to rally off, start to retake these moving averages. So that'd be a terrific outcome if that happened. We don't have that price action at the moment. As it stands, we are below declining moving averages. So I don't want to jump ahead and start saying, look, the low's in, although it does look encouraging. It's not dissimilar to the pattern that we're seeing in the ASX 200 in the moment. I think that the issue I have with gold, I think that the medium to longer term outlook on gold is still looking really good. The issue with gold is when we look at some of the gold stocks. So say we look at a stock like, let's say we have a look at a stock like Newmont. If I can just find it here in my list, just having look at a stock like Newmont, so the biggest gold producer. And you can see that Newmont is still very much in a clearly defined downward trend. We've rebounded to the moving averages, but we've had lows that have rebounded to the moving averages several times before, and then have given way to lower levels. So it's not an encouraging situation when you look at Newmont, and you can look at other ones. Look at a stock like Barrick, another large producer. It's the same story. These gold stocks don't look set up for a turnaround at this point. They could, at best case, take several months potentially to form some sort of low and follow what the gold price is doing and the way it's looking constructive. So some encouraging signs in gold, but we need to see those gold stocks start to do something more constructive with their price action. It's like we've got with this stock market generally at the moment. We've got big caps doing one thing, small caps doing another. We've got cross currents everywhere. It's just a difficult environment. That's just the environment we have. It's a case of seeing this period through, and at some point the trends will return. Everything will start to move back into sync. We just got to get there, protect our risk, and just be cautious while we move through to more suitable periods for being able to make some money from these markets. But look, with gold, in the meantime, I'm happy to keep my longer term holdings, keep my longer term positions. But before I do some more tactical plays, yeah, it's just wait for that price action. Let's go over and have a look at copper. Because copper's interesting in that it hasn't rebounded like gold through the week. If anything, you'd say this is that shallow sort of bounce that I worry about when things are in a downtrend, because you get moves when you get a market that moves swiftly to the downside, sits on the floor and goes sideways. It does usually resolve in further moves to the downside. So copper remains a concern. It's below these declining moving averages. It does look like it is going to retest lower levels at this point. There's just no immediate sign of a base. I think that as I've said for months now, I think the longer term story looks great. It looks like we had that great run off the 2020 low. I think copper almost doubled. Copper pretty much doubled over that 12-month period, and we've had the long work off period since then, which just doesn't look like it's complete. So I like that longer term potential, but the current price action doesn't agree, and the price just continues to weaken. And whilst that's the case, it's like, well, I think it's best stand aside. Nothing wrong earning interest on your money while you wait for the opportunities. Part of the skill of investing is waiting for the setups, waiting for the right time, and not losing money by looking for opportunities which just might not be ready. I'm going to have a look at oil, because oil's been interesting through the week. A lot of media coverage around oil, and I know a lot of viewers are interested in what the oil price is doing. So we've had this pullback to support over the last couple of weeks. Also pull back to the moving averages, again the 50 and the 100-day moving averages. So the overall setting remains positive. We've got the moving averages crossed back in early August. They're rising. Price has been rising. You can see this resistance which oil broke above. When was that? That was about 6 weeks ago, 5-6 weeks ago, at around that $83 mark. Got a break up above resistance, and you can see this level has been a technically active area for almost 2 years now. Pulled back to that, so you'd expect oil would find some sort of support around current levels. What I've found interesting though is when listening to the media, they give the impression that oil's already trading up at $100, but it's not. It's sitting down here on support. So from that perspective, it doesn't. The shallowness of the bounce and the excitement around oil should be higher than it actually is. Maybe it's a sign that oil just isn't going to be doing anything too exciting in the near term. Maybe it does need to chop around for several months before maybe having another go at turning higher. Or maybe this turns into a false break and it heads lower. I don't know which way it goes. We've got some clearly defined levels. Should oil get back down to below 80, well, I think you'd say, well, this was a false break. If it can hold support and chop around, well, then maybe it's a case of developing a new base over several months before maybe turning higher. It was interesting. I was having a look at the XLE, which is a US-based ETF, energy sector ETF. And if I can let's just compress this up a bit. And you can see when you look across here, there's quite a bit of resistance. So really, we could almost say that's a triple top resistance band, which comes in at around just below 95. And it's one of those cases since 2020, energy's had a great run. Now it's tracking sideways. It's like another one of those big sideways bands where it consolidates a previous large move. Looking at it closer, nearer term, maybe it doesn't look especially exciting in the near term, and it doesn't appear like the most asymmetric of entry points just beneath a resistance band. So I think energy looks interesting overall, but from a shorter term perspective, and the inability of oil to really rally over the last week, maybe it's a sign that things aren't quite ready to go in oil. Now let's go over and have a look at uranium, and I think this looks like we've now got a notable high. I spoke about this last week. I said, look, maybe this finally we've seen some sort of an important peak in uranium, more price action that suggests that that's the case. Now, I think there are a couple of ways this could be played. So, for those who are like shorter term, more like what we call swing traders, we're looking for moves over maybe several weeks or a couple of months. Maybe this would be like a take profit sort of region, because it does look like uranium may need to do some work before it can really potentially get going again. Maybe it doesn't get going again either. We don't know. But before it could potentially get going, it might need to do several months of work. The alternative play is the way I play it. It's like look for those big medium-term moves, which could run over 1 or 2 years. And they often involve sitting through periods of consolidation where the price goes sideways. You give back some of the gains from the high. Sometimes these moves don't continue and they ebb their way all the way back down to where you got in, and you give back all your gains. So you don't know. That's the risk with taking a medium-term approach. You don't know which ones are going to run a long way or which ones are going to stall and then come back. My feeling is we're looking at a multi-month correction in uranium. Just putting on some Fibonacci's, you can see that, like say the price were to come back towards the moving averages, back into the Fib range. Well, it shows it's a bit below where current prices are, but not tremendously below. If uranium can find support, and I'm looking at the Toronto Stock Exchange listed Sporot Physical Uranium Trust when I talk about uranium. So if it can hold around, say 20 to 21, go sideways for several months, I think that would be a good outcome. Look, I think this is one of the better medium to longer term setups in commodities. So it's one which I'm looking to hold, but of course everyone's got to make up their own mind what works best for them. Now we're going to get on to some Q&A in a moment, but first of all, let's just have a look at a couple of stocks which have been interesting over the last ones I've been looking at this week, which have turned up in the signals, or ones which have started to evolve since getting a signal. So the first one I want to show you is DDR, which is Dicker Data. This one actually came up in the signals yesterday, and DDR, they're a wholesale distributor of hardware and software for computers. So they're buying brands from companies like Microsoft and Dell, and then they're reselling them into businesses. From what I can see, they've had some good profit growth in the first half. Market cap about 1.7 billion. As always, go and do your own research on the fundamentals and things, because it's not an area I'm really focusing in on, but it does look interesting. And as I say, it turned up in the signals. So what's the reason for it turning up in the signals, of course, is these moving averages across the 50 and the 100 day. And we've now got the price starting to rise above it. I'll just compress this a little bit first, just give you a little bit of idea where it's come from. It really was a boom stock during the 2019 through to 2022. Wind really came out of the sails during last year, and then not a lot has gone on this year, as it looks like it's formed some sort of a base. So it's one of those recovery type plays. And so we've got this moving average crossover, which I like. And what was interesting, when we got the this breakout in August, the price then went into this tight compression band, which you often see. You often see that when a price breaks above, goes from below moving averages to above moving averages, it'll then often pause, consolidate in this compression band, let the moving averages catch up, and then have another run. So this is I really like this type of setup when we see it. Just having a look at some volume. I'm going to put a volume study on. And what we can see is we had lots of volume on this big up move. Then, as we went into the compression band, you can see the volume started to get lighter, And just in the last few days, as prices have moved up, volume started to pick up. So they're positive signs that we're getting in the data. I think it's one of those ones which look, it's got I think it's got potential to continue running over the months ahead. You never know which ones are really going to run a long way, but it's got the potential. Just putting in some support and resistance, coming in around, just following this across, probably come across a bit further. What do we have over here? Look, you can see there's certainly some sort of a technical region around $10.20 sort of mark, and that's what we're just breaking above now. So we're getting a secondary breakout, got an early breakout, getting a secondary breakout above those averages. Looks interesting to me. Also interesting to see how it bottomed out. You can see that in May, made a new low, no follow through selling, quickly rallied back, made another new low in June, again no follow through selling, quickly rallied back, another new low in July, no follow through selling, quickly rallied back. So that sort of price action to me suggests that everyone it suggests that the selling has potentially been exhausted, and it's now a new accumulation phase. So interesting one to keep an eye on, Dicker Data. Now, another one that's caught my eye is a stock called PointsBet Holding. PBH is the ticker code for PointsBet. So let's just have a look at this. And let's compress this first, see where it's come from. And you can see that, look, from this 21 peak, it was a complete debacle. Stock fell away, lost something like 90% of its value over a couple of years. So it's been a disaster. So I'd say this is probably more of a speculative type play. So what PointsBet's all about? It's an online betting shop. They've got operations in Australia, the US, although I think they're selling their US operations, Canada, Ireland. It's not profitable. It's got a market cap of about 240 million, but it's not profitable at this point. So of course that makes it more down the speculative line, but it does have that interesting chart setup. So we've seen that 95% fall. Just looking at the daily chart, I think the price action since around June has been quite constructive, in that we've had strong moves to the upside. The consolidations have been relatively shallow and sideways. Moves to the upside, again, short, shallow consolidation, upside consolidation. And it's moving averages crossed back in June, and it's been generally rising along the line of the moving averages since then. It triggered the motion trader signal in early September as we're just breaking above this resistance band, which is now support, which comes in at around 70. And you can see this level has been, it's been one of those technically active regions. So 70 is sort of like a good marker to keep an eye on with PointsBet in it, where it's currently positioned. It's also interesting because you can sort of like see a bit of a rounding bottom when you look at the price action over the last year. So let me just put this in, and you can see how the prices declined. The selling started to dry up. The lows started to not become as low, like as we saw in August, wasn't able to make a new low. And now we've got a series of higher lows as the prices round into the top side. So those rounding bases are interesting when you see them. And so look, there's no certainty with any of these chart patterns and momentum studies because they don't all run. But it's a case of just having that consistent strategy. You're looking for those same sort of setups and just playing them consistently, managing your risk. So something like PointsBet, you could say, look, at current prices, an exit stop could be even just below this support at around 70. Say it was around 63 cents. That's, you could say like a 15% exit stop would be a possible scenario on a stock like this. And you go, okay, what's my upside potential? Well, if this was to even get back to where it was in mid 22, you're looking at levels considerably higher. So 15% of risk for know, 70, 80, 100% of potential upside. So I emphasize this potential upside because you never know which ones are going to run and which ones are going to fail. But it's asymmetric in that you can control the risk, but you can get considerable upside if it runs, and it runs a long way. And of course, 15% is just a number I've come up using this support. You could also use a wider stop if you wanted to give it more room to move. So I think we should move on to a few Q&A before we wrap up for the day. And been asked about a couple of stocks. So let's start with one stock we've got a question on is a company called MP1. So that's Megaport Limited. And with Megaport, look, interesting stock. It's in an uptrend. You can see those moving averages are rising, prices above the averages. Let's just compress it, have a little bit more look at the data. And one of those ones where there was a big move during 2020 and 2021, big decline in 2022, like a lot of stocks, but then it looks like it's gone through a basing period. And this is a sort of move which I think is potential in stocks like DDR and PBH, in that the averages have crossed and we're into a new accumulation phase. Trend remains up. There's no sign that it's stalling other than we're going sideways at the moment following this initial rally. If I was holding this, I'd continue holding it. There's no sign for me. Given my medium-term approach, remember, I'm looking for stocks that could run for 1 to 2 years. On that basis, using a wide trailing stop, if I'm in at a good level, I've got no reason to sell a stock like this. I want to see how far it could run. Now I've got a question about CU6. So that is Clarity Pharma. And just getting my mouse to re-engage. There it goes. So first thing I like to do, I like to get a little bit of perspective on where it's come from. So you'll always see me compress the chart. Where's this stock come from? Big decline, initial stages of a recovery, then a lengthier and deeper pullback. Averages crossed again and it's starting to run. So it's one of those stocks which has the potential to continue to run. It's pulled back to the moving averages. So at the moment, there's nothing unusual about the way it's that we're seeing the price action. We're seeing an impulsive run up. So impulsive in that we've got higher highs, higher lows, and the runs, the periods where it runs upward is a lot stronger than the periods where it pulls back. So that's what I'd call an impulsive move. And then so far, I'd say this is a corrective sort of move back to those averages. It's a sort of stock which could require further consolidation, could require several months of sideways, or it could continue to ebb away. I don't know. I don't know which way it's going to go, but at the moment, it is fitting the criteria for a stock which does have the potential to continue running. As I say, we never know which ones are going to continue running or how far they'll run for, but it's just playing. It's playing odds basically. Things that run. The path of least resistance is upwards, so you just play that out and see where it goes. And if it doesn't base here, if it continues to fall, well, there can be an exit strategy to get out. Being asked about CRN, and CRN, it's a resources stock, and let's see. So one of those ones again, big upward move, large correction. The correction in this one's been from the beginning of this year, and what coincides with that large move up we saw during 21 and 22. But then we get and this is the thing, like I don't want to buy, I don't want to try and pick the low as a stock is falling. When it's below these declining moving averages, it's just, I think the odds are against stepping in and having a go. Here's a great example of a shallow consolidation. So sharp downward move or steady decline, sideways consolidation. You can actually even draw that in on the chart. You get the classic flagging formation. Annoying when your marker doesn't work. Yeah, so down, flagging formation, broke to the downside. So, always watch these shallow consolidations when it moves to the downside, because they often resolve with further selling. But since then, we've had the moving averages cross, we've got a breakout to the top side. Now, the question is, will this continue to run? And that's what we don't know. Or will this turn into more of will become a stock that just tracks sideways for many more months? You can never tell. So it's a case of going with the signals and seeing where they go. And if they don't go far, you use your exit strategy, get out, get into something else, and see where that will take you. And some of these stocks can take you a very long way. But we don't know which ones until we look back in hindsight. But at this stage, pull back to the moving average. The upward potential remains in play. Now, I've been asked about a stock called ticker code MTS. And Metcash owns the IGA supermarkets. Interesting one. Look at this. The moving averages are just starting to cross, and it's just starting to get above some near-term resistance at around $3.80. Let's just compress it a little bit. And look, it looks like one of those ones where we've had a really nice upward move and a period of consolidation where it's held on to most of those gains from 2020 and 2021. And this is the 2022 period where a lot of stocks struggle, but Metcash has really held its own quite well. This was an interesting period here. So if I can draw in, there would have been some. You could frame this up as a trading range where the price fell back sideways within the range, started to break down, but there wasn't a whole lot of follow-through selling, quickly snapped back. So that's an encouraging sign when you see that. When you get a breakdown, but you don't get the follow-through selling. So if this was really going to come apart, that was the opportunity for that to happen. And it's now come back to the breakout point, consolidated. Now it's starting to edge higher again. As I say, the crossing averages break to a high. That's a stock I'd be keen to keep an eye on. It's certainly got some. I think it's certainly got some potential. And now I've been asked about a stock of a UK stock, TORM. Let me just see whether I can get that. TORM. That must be it there. Yeah, it's what do we think of this? So big move up, correction, consolidation. Look, the moving averages are positive. I don't know whether this is like, given the extent of that move, this could turn into one of those stocks that then travels sideways for months and months, and then maybe breaks upwards again. Or other ones don't break upwards. They then start to taper off and come back. So there's no way to know what's going to happen. From an asymmetric perspective, I just struggle buying a stock that's gone, that's run so far, and it is technically you'd say, look, it's above those moving averages. The moving averages are rising. If I had some, I'd continue to hold it. There's no reason to sell it. But I just don't think I'd be too keen to buy it just here. I'd also look at you'd probably expect to find resistance at previous highs. So it's one which, it's probably not my favourite type of setup. Couple of motion trader stocks, MAD, Matter Group. Now, Matter's been a terrific performer over several years, and we're getting a pullback at the moment. And so it's not unusual to get big pullbacks. You can see Matter's given some big pullbacks in the past. So I can look at this period here. That actually doesn't look dissimilar to what we're seeing now. So this is back in 2002, where the stock had hit an all-time high and then pulled back 31%. So this is the advantage of wide trailing stops. Yes, they give back more profit when they when they get hit, but they also can keep you in these big trends for a lot longer. So Motion Trader was able to ride off that 31% decline as the stock stabilized and just kept going up. And you can see, there's more pullbacks. There's another big pullback here. Wide trailing stop kept us in almost a 30% decline. Now here we are. Where are we now? What's the decline so far? That is so far a 24% decline. So it's well within within the parameters of what we've seen in the past, where the stock has been able to stabilise and rally. It's come back to the moving averages, as we've seen at various other points along this rally. Sometimes it's overshot the moving averages to the downside, which it has here. But this is what we don't know. Is this it? Have we seen the peak and it's now getting ready to come down and trigger the trailing stop, or will it stabilise and go up? And absolutely nobody can give you the answer to that. It's a case of, I think, if you want to trade medium-term trends and you want the potential to ride stocks which might go up 100, 200, 500% or more, the only way I know to do that is you've got to give them plenty of room to move, and you've got to concede that you're going to give back. You're going to end up sitting back through maybe a 25 to 30, 35% pullback at some point, which will trigger your stop, and you're going to give back some of the gain. But the only way to get that gain in the first place is to have that wide stop. So there's no way around it where you get that free pass to make a lot of money without any unpleasantness in the pullbacks along the way. If I were holding Matter, I'm not holding it, but if I were, I'd continue holding it. If I'd held it for the motion from the motion trader signal, I think it could be up something like 500%. If it was becoming an abnormally large position in my portfolio, I might consider trimming some of that position to make it more of a not such a weighty position. I've done that before with one stock in particular, a company called Jumbo Interactive a few years ago. It went from something like, rough numbers, a 2% part of my portfolio to a 15% part of my portfolio. So I just thought, look, this is just too big a position. I'm just going to sell. I think I sold a third of it just to bring it back to something which I was more comfortable with. But there's no right or wrong there. So I think Matter remains in an uptrend at this point. Moving along, having a look at let's have a look at I've got a lot of questions. Would you add to a position during a correction? It's a really good question. Let's just use let's use Matter, since we've got it up on the chart. A lot of people like to buy the dip. I've got no problem with buying dips. Buying dips can be a very effective strategy. It's just a matter of what dip do you buy. So using Matter's a stock which has been mostly trading above rising moving averages. The time to buy a dip, I think, is when a stock which is in an upward trend pulls back to its averages. That's when I'm interested in buying a dip. So it could be a case of having orders back around the 100-day moving average. Noting with Matter, the averages aren't like magic support zones that will stop the stock. It has overshot on several occasions. I don't think I'd really want to buy while it's below the moving averages, but as it's pulling back, if it looked like it was getting support and bouncing, buy the dip. Buy the dip there. You could, there's several dips in Matter where you say, hey, the stock's running, it's pulled back, it's sitting on the averages. Maybe that's a dip that I'd want to consider buying. Where it hits an average and starts to rebound, maybe that's a dip I'd consider buying. So they're all good examples of buy the dip. And dip I don't want to buy is, I'm just going to a stock which I know has been through a large downtrend, Magellan Financial. This is the sort of dip I don't want to buy. I don't want to buy when a stock is declining below the averages. Even if it had been a previous market favourite, don't want to buy when it's below the moving averages. It just opens the risk that you get a stock that continues to decline. Wait for the breakouts. I think it puts the odds in your favour. IHL. Let's have a quick look at IHL. So I'll just do a few more. It's just not going to be possible to go through every stock in these. Otherwise, we'll be going for a few hours. IHL, look, just quickly off the bat, it's in that clear downtrend below declining moving averages. So it's not one I'd look at the moment. I'd need that price action to turn around before it could be a possibility for me. IZS, big run. not a stock I'd be looking to buy. I don't think it's not even a dip I'd be looking to buy, because I look where this stock has come from. It's come from 30 cents up to $3. That's like, tenfold. It's I'd put this in there. Like, is it an asymmetric entry point? Could you make money? Yes, you could make money. Is it asymmetric? Probably not for me, because I'm looking at, like, where's my downside? Where do I put my stop loss? If I were to buy now, where do I put my stop? What could I make? Maybe it just goes back and retests the previous high. So maybe it's like, it's a 50-50. My downside risk and my upside potential might be similar. So if I was in it, maybe I'd be holding, depending on what my stop loss strategy was. I could have possibly seen off this correction and see if it stabilizes and continue up. But it's not a stock I'd be looking to get. And what else do we have? Got a NASDAQ stock. Have a look at TPST. Pharmaceutical. Oh, I can't do much with this one. It's it's like that's not price action I can work with. Where something is, I don't. If this is correct price action as well, I don't know. But where it goes from lengthy decline to spike upwards, that's in the. I'd put that one in the too hard basket. Now I'm being asked about. Is that AIG? AFG. Okay, let's make this one the last one. I need to wrap this up, because I'm mindful of your time, and I've also got to do the video for the US stocks. Australian Financial Group. It's look like this is one of those ones. Big decline. Look like we're getting some sort of a base. Moving averages cross, and the price broke higher. Continued onwards nicely for several weeks, but then it's had this sharp decline. I think this is a motion trader stock. It'd still be above its exit stop. It's not. This isn't a dip I'd want to buy, because the moving averages have now crossed and the price is below the averages, and it could, like, the reason motion trader uses a wide initial stop is to see off initial volatility, and to reduce the need to have a lot of turnover in stocks, because quite often stocks can whip around above a wide stop and then move upwards. It can be part of a lengthier basing process, but then of course some will just simply fail and continue down, trigger the stop. So at the moment, it's depending what your exit strategy is. Like, I use a time exit for a lot of my stocks. If it's been in the portfolio for the set amount of time, it isn't performing, I'll exit it. I won't wait for the stop loss to be triggered. Waiting for a wider stop to be triggered, that's completely viable as well, but not a stock I want to buy. It does still look like it's got the potential for this to be part of a basing structure, but the upward momentum is not there at the moment. So it's it's not a situation I think that we could play with. So look, let's call that a wrap for this week. Thank you for joining me. Hopefully you've enjoyed the live session. Make sure you give me that like and give me some comments to let me know what you're thinking. And I'll look forward to coming back and talking to you again next week. Till then, bye for now.